You want to get going? You feeling good? You feeling ready?
Let's hit it. Yeah.
Come on.
Yeah, good enough, man.
All right, here we go.
Sip of water here.
All right, here we go. 1, 2, 3. Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Don Nitti, venture partner at Social Leverage, a venture capital fund. Our fourth amigo here, Clint Sorensen of Well Shield's out this week. He's on holiday. We had another gentleman all set up to join us, but he got a family issue come up, so it's just the three of us today. So we'll make it happen. We'll carry it. All right, so I got three topics to hit. Deel launches a full stack HR tech and announces their 2022 metrics. SpaceX completes their first Starship fueling test, and Stripe expands payment processing and cloud partnership with Amazon. All right, so let's hit up this first topic with Deel. So this, their CEO Alex Bouzes, I don't know if I pronounced that right, but I'm going with it. Right, announced their metrics. They crushed it. These guys crushed it. Look at these numbers. This is like over 400% ARR growth in 1 year. They turned profitability, 85% gross margin. They're crushing it, okay? They launched these three new products, which we can get into, right? And then also the valuation. So they had a $12 billion valuation in May. That was a primary financing round. They're down 6.5% year to date. This is, of course, courtesy of our boy Nitti Fusco at 8View. But I got their kind of valuation based on the last primary round at $6.6 billion. But here, let's do this. So Don, first question is to you, man. So you're like familiar with this company, so give us the rundown. What do you know about Deel?
Yeah, I mean, I think, one thing to talk about the business, right? They're a global payroll provider, HR solutions company. If you really want to throw a comp out there to it, you could say Gusto's a comp, but they essentially specialize in international. And, touching on the metrics, I guess we could go into the financing round. So the last round, they raised $50 million at $12.2 billion valuation. So, give or take, we could call it 41 times trailing ARR. But the business has been growing 20% month over month revenue, which is pretty absurd. And then the last, quote unquote, real round of the business was they raised $425 million at $5.5 billion. That was Code2, Andreessen, Altimeter, Spark, and a few others. So they've raised $670 million in capital to date. And then going on the metrics, $295 million ARR, you back out of it. So they're doing $25 million a month in recurring revenue. You said the 85% gross margin, they're EBITDA positive, 250,000 employees on the platform. So if you think about that, you're getting to an average of $1,180 in revenue per person hired. And then basing on their product page, it's $50 a contractor a month, $500 per employee. So that's $6,000 per year. The business is still skewed towards contractors. So they really do have a lot of room for upsell, and their pitch and the value proposition, as more got outsourced, COVID was a huge beneficiary, as remote work, especially international.
All right, so hold on. So how does it work with these guys? So if I'm a founder, right, and I want to hire a developer, like I can go to Deel and they'll find me like someone in Eastern Europe or South America, right? And then, is that right?
Yeah, I mean, I think the real talking point about this is about what goes into hiring, and the problem that they're solving for on an international basis is, AG Dillon Enterprises needs to get a dev in India. You're going to have to comply with local laws, country laws. You're going to have proper tax reporting, remittance with every district in that area. You're going to have to be able to track employees, provide them with equipment, phones, computers, etc. You have to issue it, comp, equity in the business. So once you become full stack, like Deel has done, and you do it right, it becomes an incredibly sticky process because the switching cost it's not worth it, right? So they've built this moat internationally, and now you talk about what they've, he tweeted out the other day, and you think about product, right? Now they're launching more product, more full suite. So that just goes into how they believe they've built this moat in their specialty, and now they're able to upsell this.
I think you just pitched it to me, Don, because
I think the business is. I don't know. You look at some of these things, and we have the conversation of valuations re-rating, and was that 12.2 billion that the finance agreement, was that a real number? Was that a zero interest rate number? And you look at the data that you guys are providing and what pricing showing there at a $6 billion valuation, seems to me like you're getting the growth for free.
It looks like it's an absolutely incredible company. I just picked up coverage on this, so I'm getting into the business more and more, literally like 2 weeks ago. But it looks like a winner to me. I guess, Nick, the question I have for you, so you're like a founder, right? You're building your business. There's a lot of technology in what you do based on the conversations that I've had. Like, how do you think about are you hire developers in the US, you hire them overseas? Like, how do you make that decision, right?
Yeah, right. I mean, right now we have developers based in the UK, in the US, and we actually just got a really solid candidate. I hope he's not listening in. But our top is out of Colombia right now for the next
Colombia, the country, not the university,
we have,
right? Okay.
Correct. Yeah. And to be fair, I mean, even when I go across state lines, I'm having to hit a lot of the things that Don's referring to, unless we get a 1099 employee. So it is very tricky in terms of covering those employees for what you need under a good HR practice. And I have a few disparate kind of non-connecting HR kind of companies that I have to work with. If I could bring this all together, maybe I should look at Deel. So that's why I was saying, hey, Don, nice pitch, because I should be doing that. But if they can alleviate some of that complexity, and I think to your point of being a founder nowadays, you don't care as much about the location of that employee in a lot of cases. So I know that when I'm in New York, I go through NICEF to do my insurance coverage for all my employees. But once I go across state lines, that's something that Deel could certainly assist with.
Yeah, I think these guys are a winner. I mean, Don, you and I were talking like maybe even dip your toe, get a little nibble on the secondary, right? It's a good spot to get in.
Yeah, I think people discount a lot of these business. We worked on a company a few months ago, and founder's awesome, and the more growth stage, we're doing 200 million in revenue, but it's go to market in China, and a lot of people don't succeed in China. It is impossible there, and it's been impossible forever. And people don't realize that local compliance, payments, this, that, you solve for these problems, as Nick said. Even him as a founder, it's a massive headache. All
right, let's shift gears. Let's hit some SpaceX. This is like my favorite company to talk about. But they completed this fueling test for Starship, right? This thing's all right. So let's just hit on this quick, and then we'll move on to Stripe, the last topic. But so this thing's 400 feet tall. That's like 28-story building. To give it context, that's huge, right? And it carries 10x the payload. So I know we talked about that's going to be like more revenue for these guys just on payload delivery, but then also for Starlink, they're trying to send more satellites into space. Obviously, you get this thing cranking, they're going to be able to get all those satellites in, which gets that thing cranking too. But I guess, Don, what do you think? What do you think they actually are successful in getting Starship to go up, right? Successfully launch this thing. What do you think that does to the valuation? They're at 137 billion right now.
A few things about space that were always interesting, especially during the 2020 COVID environment of anyone buying. You saw a billion SPACs go out that were space related, and the one thing that everyone talked about was, well, it's space and it's an infinite TAM. No one's gone there, right? So if you want to talk about TAM, which was like the whole story of everything, right. It's an infinite TAM, right? It's where you think about what they're doing here and building bigger rocket ships. It's just like, what's the scalability of satellites, right? Like they're going on, he has one ship that can maybe bring up 3, but the bigger, the bigger, faster, stronger we get up there, we could launch 10, 20, 30, 40. And then you got to back out of the math. I don't know it offhand, but like, what do these satellite launches generate on a revenue basis? And then try to apply that back into what the valuation is and how does growth look and et cetera. But I think it's just them being able to scale this operation much faster. So you either go bigger or launch a lot of smaller ones. And I would assume, I'm no rocket scientist, but the complexity of a launch, does it really matter if you launch one that's 400 feet or 20 feet? It's probably going to be, the same process. It's like underwriting a deal. You see a lot of funds that are like, we won't touch anything that's less than 50 million because you're writing a $50 million check. You're doing the same amount of work for a $2 million check.
I mean, like this thing, between this thing going up, if they're successful in getting this thing up and they're landing it back and they're able to turn it around and get it back up again, like they're doing with that Falcon rocket, there's that, and then also the Starlink thing really taking off. I think those two things could have the valuation kind of go through the roof. But so Nick, what are you seeing in the secondary market? Is there a lot of trading activity from the brokers that you're seeing come across in SpaceX?
Sure. Yeah. The just to echo what you were saying, I think the reusability of these rockets is next level. I mean, they're the pioneers here, and then the secondary activity is absolutely through the roof. So in November alone, we saw in excess of $1 billion in terms of bids and offers on SpaceX. Right. So when you compare that to actual valuation, that's going to be one of the deepest markets you're going to get, or that we're observing it from AFU across all the secondary names. So a significant kind of market growing there with a lot of interest. I mean, when you look at it, this is the hot name that people want to get involved
it's true.
with. Right?
It's true. Okay, let's hit this last topic because I'm loving this topic here. Okay, so we got Amazon and Stripe do a big deal here, right? Where they call it significantly expand their existing relationship. So these guys have been working together since 2017, but basically from what I gather from reading about it, it looks like Stripe's like almost taking over all of their payment processing in the US, Europe, and Canada. They're already helping them out in Asia too. That's been going on since 2017. But the thing that I want to talk about here, just to hit on this. So Stripe's down 71% over the last year. They have a $63 billion valuation. That's the 409A that happened this month. And then Nick put this together for us here too. So their implied valuation through the APU data has them at $64 billion. So that's directly in line with the 409A. But the one piece I did want to talk about is this bit around, it's almost like quid pro quo, right? So you got Amazon giving more business to Stripe, but then at the same time, Stripe's kind of like increasing its use of AWS, right? So this is the second deal that I've seen like this.
Well, it's the Microsoft. Yes. I mean, this is what's happening, right? It's all a race for whose cloud you're going to use. And if you don't use a partnership, Microsoft LSE deal, I mean, this is where it's going.
I didn't even think of that one. But the OpenAI.
This is the only way they could scale.
Just hit last week, same thing. So Don, that's what I want to ask you. Is this like the new thing? Are we going to see, it's this like coupling of deal terms? Like, we'll do more revenue with you because we're this big 800-pound gorilla, like, Google, Amazon, Microsoft. But you guys, we'll either invest or we'll give you more revenue. But, you guys got to come back and use more of our cloud services on the other side.
Well, it's funny because I was we were looking at the Microsoft LSE deal that they signed, and I think it was something like, it ended up costing, it was like $2 billion. It was something ridiculous. I was like, this was the most expensive customer acquisition of all time. But the only way to do it is you need to spend, and you see the scrutiny of cloud, right? Like Microsoft just reported, and they guided lower, but at the end of the day, the whole street is just focused on Azure numbers, right? Like Amazon, everyone is focused on what AWS is doing. So you're just seeing this huge competitive bid going back and forth between these cloud behemoths. And it just shows you the low-hanging fruit, conversion isn't there anymore. And the only way for them to do it is just build these monster partnerships. To meet numbers, but what they pay for it, that's up to the corp dev team of how much can we actually spend to do this?
Intimately, I think it almost goes beyond once you get over from AWS to Microsoft and then into Google. These are all bundled packages as well. So for you to be able to reverse engineer what the actual deal terms were specific to that line item, for Microsoft and Google are almost impossible, because it's going to be a bundle of your Gmail, your PowerPoint over at Microsoft, your Teams, your use, your Outlook use, all the other services that come as ancillary that you can kind of mix in, and it makes the bundled package almost completely obfuscate
it's funny,
the price point, right?
They were saying with Twitter, with Musk, your boy AG, that the biggest cost savings, well, one of the biggest cost savings they had there was him going in and looking at all the Google services bullshit that they were paying for that no one was using.
Well, that's how it works.
Like, it's crazy.
Because when you go in for a bundled package, and then let's say Elon wants to start ripping out certain smaller services of Google, right? Google's going to say, oh, well, that was a bundle. And that particular package actually costs very little. So when you're yanking it out, you're not saving nearly as much as you think you are, because of the.
Okay, so I've never done.
I've got a couple friends that are sales at both a couple of those companies.
Because I've never done anything with cloud.
Deal.
Like, I've never done anything with cloud before personally, right? It sounds like you guys might have done something. Like, do you have strong preferences whether like AWS, Google Cloud, or Microsoft is better?
Well, Nick would know more on the enterprise side. Personally, I just use Google. I think we use Google too at Social Leverage.
I don't want to advocate for one or the other, but when we compared across Microsoft, Amazon, and Google, Google was more accessible and got us where we wanted to be at a lower startup cost. So I don't know once we hit the big numbers, but that was the most approachable. And we went.
Okay, and just so like, this might be a remedial question, but like I guarantee most people don't even know what this actually means to use the cloud, right? I mean, Nick, like explain what that means for the average layperson that's not in technology, right?
I mean, if you went back 20 years, you'd be. I mean, I was building some products with a friend. We were standing up our own servers and hosting websites and things like that. And you have to have your own server space instead of kicking it over to a cloud provider that's going to manage all of kind of that sort of asset holding for you. And we can have our data sitting in, I forget if it's Indianapolis or where out west, with multiple backup locations, and everything is just done for us in terms of your infra, your authorization, your permissionings and things like that. Fully encrypted, fully protected, and it's not something that you have to worry about someone coming on your site.
Well, you can scale too, right? I mean, that's
so,
like another bit. Like if you have a business and you're doing X amount of product, like 1,000 customers, and then all of a sudden something hits and you're like 2 million customers. Like if you have the cloud, that scales nicely, right?
Correct. So particularly the last business I was in was all in and around AI/ML, and the ability to scale up many servers quickly, kind of simultaneously as well. I mean, you couldn't really do that in a cost-efficient manner if you manage all your servers in-house. It was just brutal. But that's all changed in the last 20 years, right? The cost to commit processing is so much cheaper now. So we certainly appreciate that. To stand up my business several years ago would have been a few $100,000, right? Just in
I got you. All right, boys. So listen, that's what I had for us today. Anything else on your mind? What do you think?
Just wondering.
I don't have an Elon Musk tattoo, but this guy is everywhere. I mean, he's got like 8 companies, right? I mean, there's like SpaceX, Twitter, there's Neuralink. What else does he have? Tesla.
Nick, you should do a correlation chart between SpaceX private pricing versus Tesla's.
That's hot. That would get picked up big time for sure.
That's a great comment.
I will say just a fun comment. We were used as an input coming out in a publication that's going to be in and around Musk's net worth. So it had to take into account a lot of his private holdings. So stay tuned for that. Should be out in a month.
Awesome.
But you'll get to see under the hood a little bit.
That's cool. Yeah. No tattoo. No Musk tattoo.
Yeah, worth more than us. We'll say that much.
No tattoos at all, Don. But you never know. Maybe I'll. Maybe one day. Definitely not must though. All right, gentlemen. All right, I appreciate you guys. That's it. Let's call it there. All right. Okay.
See you in a week.
Thanks, boys.
Awesome.
Cheers.
See you guys later.
Bye.